Is it better for the stock market if one political party is in office versus another? Well, there's actually a very clear answer, and it's going to surprise you. I've got that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. A few months ago, did a video about, is it safe to invest during election years? And history's pretty clear on that. Yes, there's ups and downs based on macro issues and big economic issues like we're facing right now. Not sure when you're consuming this, but for the most part, history is very clear that yes, investing during election years is actually a usually very profitable thing. If you look at the 4 years of a presidential term, the fourth year, the election year, is typically the second best out of the presidential term. So not only is it safe to invest during election years, it's a very good thing to do. In fact, look at any of the years, tend to be good years in the market. So now we take the question a little bit deeper. Saw an article recently that really emphasizes the point that we're gonna build towards, but that is, do we care who wins? And yes, you do. You very much care who wins the election, because you've got your political views, your own thoughts on the direction of the economy, the direction of the country, and that's very important. From a stock market perspective, though, just from an investing standpoint, one of the challenges is, should your political views be separate from your investment decisions, or should they be very much connected? Well, a very clear data point that we're going to build towards, I'll answer later on in the video. To help us do so, let's first look, going back to the Great Depression, what's the stock market done based on who's been in office, whether Republican or Democrat? Well, take a look at this chart. Do you see any trends? Do you see any trends? To me, there's one clear trend, and that is no matter whether it's blue or red, stocks tend to do well. And if you look beneath the chart into the actual numbers, that's the story as well. We'll get to it. We're building towards that. But I think you can see a trend. You know, George W. Bush was actually president during the two largest financial crises since the Great Depression. He got walloped with both the tech bubble and the beginning of the Great Financial Crisis, so the downturn, but not the rebound. And you could ask, well, were those directly caused by George W. Bush? I think the answer is no. You could say, well, did policies contribute to it? I'm not going to debate you there, but you can also look and say, yeah, I mean, the Clinton era was very positive. The Reagan era, very positive. Lots of areas were very strong. And again, both blue and red. So no matter who's in office, data is showing markets tend to do well. Well, let's go a step further. What about Congress? Does it matter who's got control of Congress? Same chart, but you'll see, you know, blue, red, but then also split, which in this case is purple. And do you see any trends here? Well, the only obvious trend is that, gosh, there was a big chunk of time when Congress was held by the Democratic Party. But other than that, blue, red, even purple, markets tend to do well, regardless of who's in control of Congress. Taking a deeper look there as well, let's look at the actual numbers. This is where we can actually start seeing and parsing the data up to see some of the trends and the very obvious trend that is not the punchline. But take a look here. If the Senate is democratically held, around a 6.3% stock market rate of return versus Republican held 11.9%. Is that causal? I'm assuming not. House, when it's held by the Democratic Party, 7.7% rate of return versus held by the Republican Party, 11% rate of return. Let's go far right. If it's all Democratic, okay, then and it's completely unified, pretty low return, 5.6. If it's all Republican, same thing. Pretty clear, 5.7%, so lower returns versus split Congress. That's the highest percentage rate, 13.3, or split president in Congress, 10.1. I actually think those are connected. When it's unified based on one party, the returns are lower than average. When it's split, the returns are higher than average. Those are the only numbers on here that I actually think there's some causation to, and that is because normally when there's a split party, it's hard to make big changes. It's hard to pass a lot of adjustments, and therefore Wall Street and investors look and say, okay, we know the rules. We pretty much know how things are going to operate, and therefore we think these companies are really doing well and prices can get bid up and vice versa. Versus when it's a unified one party, we don't know the rules. Actually, they could change a lot of things, and so therefore we don't know the sandbox here. Maybe our outlook on the future for stocks is a little bit fuzzy. It's unclear because the rules might change. But let's go back to the question. Is it better as an investor, is it better on Wall Street if one party is in the White House versus another? On the far left of this data, you start to get the point, and that shows that when the Democratic Party is in office as president, 11% average rate of return. Now this goes back from 77 to 2019, so it doesn't have the most recent data, but it's still pretty clear. About 11% rate of return versus when a Republican is in office, just under 8% rate of return. So is that the takeaway? So I saw this article recently, and there isn't a chart to go along with it, so you just need to follow. But to me, this is the lesson that we all need. This is the lesson that we all need, and it takes what I just said a little bit deeper. Now, if you were to, this is data from Schwab's, Liz Ann Saunders, who I follow, and Kevin Gordon. If you were to invest, now this is going back to 1961, only invest when the Republican Party was in office, okay, was in the White House. You took 10 grand back in 1961 and only invested when Republicans were in office. You'd grow that 10 grand to over 100,000. It's a pretty good rate of return, right? However, if you, going back to the same time period, took that 10 grand and only invested when the Democratic Party was in office, instead of having 100 grand, you would have over $500,000. Very clear which one is better for Wall Street, but that's not the takeaway. If you would have taken that same 10 grand and invested it back in 1961 and held it no matter who was in office, you wouldn't have turned that 10 grand into 100,000. You wouldn't have turned that 10 grand into 500,000. You would have turned that 10 grand into over $5 million. Guys, that is the takeaway. Invest no matter which political party is in office. You're going to have your strong views. I know you will. I have mine as well. You might have those strong views in the case of, hey, the direction of the country seems to be going awry or whatever. I get that. However, the president and the White House only has so much control on the overall economic environment, okay? If you would say, well, who's got the most control? I would say the Fed likely does, not the president. However, good times or bad times, Republican in office, Democratic Party in office, tends to not matter as much. Stay invested. And therefore, going back to a comment I said earlier in the video, is it best to have your political views coincide and mix with your investment decisions, or is it best to keep them separate? Based on this data, very, very clearly, I would do the best that you can to separate those strong political views that you have from your investment decisions and stay invested in the best companies, the best enterprises on the business, navigating the economic circumstances, no matter who's in office, and stick with that. Ensure that you've got the right investment strategy, that you've got the right investment mix for your long-term plan. Again, stick to that regardless how the election goes this November. Work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us here as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.